Welcome to the Dumpster Dive segment. In this segment of the show, I find one strictly undervalued stock in the stock market that I think has a lot of value. I'm looking for everyone else's trash and possibly to provide you some treasure. And that's what I'm bringing you here with the Dumpster Dive. Now, this is a company that is a tech company and a fairly decent sized tech company, $400 million tech company that is 97% off of all-time highs. This was a tech company that was trading in the triple digits. And now it is only in the single digits. And interestingly enough, they're doing better now than they have been. So is this company a company you should consider? Well, let's find out. That company's name is Bigcommerce, ticker symbol BIGC. That's BIGC, Bigcommerce. Now, for those of you that don't know Bigcommerce, it is a company that runs an e-commerce platform for businesses. So think of it like a Shopify, very similar to Shopify, but with their API first. So they have an open SaaS model, right? So this gives a lot of flexibility to a lot of businesses. Now, what I've done for you guys is I've compiled a bunch of information, some from the fundamental side and some from the technical side, to kind of give you a full game plan on if this is a company you should consider that may be a good fit for you. Now, full transparency, before I get into it, I have no position in Bigcommerce. I have no shares, no nothing, no options. However, I do plan on opening a position in the near future, but prior to making this video, I currently have no position in Bigcommerce. Now, with that being said, Bigcommerce currently is trading around $5.18, has a market cap of roughly around $400 million, and to be fair, it is still an unprofitable company at this point in time. However, margins are improving and so is their cash flow over time, which we'll get into in a little bit. Now, comparing this company to its peers, it has a PS ratio that's under 1.3. So if we're looking at comparing it to like a Shopify, which again is the giant here, it's the most like comparable business we have to this kind of business, Shopify is up into the 9-11x range. So strictly undervalued just from a PS ratio. Now, this is just one thing you could use to drive a valuation for a business, but very intriguing in itself to at least look at it from that point of view. Now, in general, and obviously because this is 97% off the high, it is heavily discounted relative to its historical revenue growth and its current potential. So, like I said, over time, this company has actually been getting better, but the market is still consistently just punching it in the face over and over and over. So think of it as it being priced in that it's a company in distress, like the sky is falling, so to speak. And this current evaluation, I believe, implies that there are very, very small limited expectations on this company for the overall market. The hedge funds, everyone else out there, they're not expecting much out of this company, and they've priced it in as such. So if anything, this leaves this company with an asymmetrical upside if they can actually execute. So if they can actually, well, I say if they can actually, which kind of sounds negative, but if they do, in fact, execute successfully, then a company like this has a very asymmetrical move to the upside because it's been beat down and basically hated as if it's not going to be, right? And that's what's really interesting about this, or I guess really what's interesting from a point of opportunity with this kind of company. Now, if we're going to go over the technicals real quick, let's just take a quick peek into BIGC, and this is the daily chart here. Basically building some level of a base for the last 2 to 3 months here. Decently rangy though, for all things considered. That all-time low is $4.73. Like I said, currently trading around $5.18, and the top of that range roughly around the mid fives. So you got about a dollar range that it's been bouncing around here, which for a company this size is actually a decently big range considering it's about 20% of its value. Pretty big range. But looking at it from here, it is building some level of a base relative to its prior price action. Let's zoom out on the week here, where it would build these bases, so to speak, and break down and build a base and break down, build a base, break up, so on and so forth. And it's at this point where it's building another base. Now, the one thing that remains consistent about looking at this company in general is it cannot, for some reason, get over the 50 or the 200 MA to save its life on the daily. It will get periods of time. So this is a daily chart. It gets periods of time. Dark blue line on my chart's at 200. The purple line is the 50. Where it can get over it, but it doesn't sustain. And you don't believe me, look at your chart right now. It cannot. This is basically the only example in which it had a short window of time where it could have worked out and just failed. Back down again, rejection specifically on the 200 MA on the daily over and over. Short break again here, and another attempt here, shut down again. And now it's been beaten into the dirt pretty bad, in my opinion. So from a technical perspective, is it the most glorious play? Maybe not. However, I do like how it's starting to curl up here on the daily. You got a green MACD, and the weekly MACD is also turning up here with a red SAR coming down. So there is some short-term opportunity to actually reverse here to the upside. Not to mention your monthly SAR, which has never gone green, ever, in the history of this company. Going back 5 years, the monthly SAR has never gone green. If you don't know what the SAR is, stop and reverse indicator. Basically plays on the parabolic nature of the stock market. It's one of my favorite indicators. That SAR number on the month right now is a little high. It's at 6.6, but it has never broken. And if that breaks, I am almost certain on that indicator alone that you're going to get a solid move to the upside on this name. And also with where it's currently sitting, if you were only risk all-time lows, you're only risking a downside of about 40 cents or so. So about like a 10% drop from here. 10, 12%. So your downside risk is pretty minimal considering the potential upside on equity. We're not talking about options. We're talking strictly about equity here. Now, keep in mind also, you might think, well, a company like this being in the dirt might be highly shorted. Well, kind of. Now, what I determine as high short interest is around 10%, anything above 10%, I should say. It's pretty high short interest. This company roughly has about 8.5 short interest. So not strong enough for like a squeeze, like a short squeeze candidate. But with its float and with its market cap size, it could obviously add some bullish momentum if there was a short squeeze in the sense that some shorts start to close out. With it being known, the days to cover on this stock is roughly around 5 days. So if those shorts were to close, we have about 5 days of upside, or take them 5 days to close out their position. But what I find most interesting, and where a lot of people look at a company and they go, oh, this company's heavily shorted, it must be a short squeeze. No, don't look at companies like that. When a company's heavily shorted, you need to look at it from the lens of there might be a reason why it's heavily shorted. Could be, right? I should at least look deeper into this. What I like about this the most is this company was shorted even heavier in recent weeks, and that's actually been declining. So I actually like that because that's telling me shorts are leaving. Now, we're not getting a short rally, right? We're not getting a short squeeze, but I don't care about that. That's showing that there's more confidence in this name, or at least at this price, or shorts have made their money. They're looking at it and going, yeah, it's $4, it's $5. I've shorted it from 20, 30, 40, 50, whatever price. I can walk here, right? My risk to reward, I can only go into bankruptcy with this company and go to zero, right? So what's my upside here as a short? And I'm paying margin, right? Or interest rate to borrow the stock to short it. So seeing them start to close out is an indication to me that the risk to reward is actually flipping to the bull side. And with the remaining 8% of bears that are still in there, or 8% of the people who are short the float, that still gives you fuel to an upside rally, which is still a bullish thing in nature. Now, I'm specifically looking, I wouldn't get too excited on this name until it starts to break above 565, but that doesn't mean that I don't want to build a position down here. Now, it's got some support resistance areas right around here at 522 and 505, and obviously, again, risking that all-time low at 473. So if you did like this idea on this name, again, even getting in between these two support resistance zones, you're only risking 40, 50 cents here of downside, which, arguably roughly 10% depending on your entry, when you got a gap all the way up here at 130. Now, I'm not saying that's happening right away. Don't shoot the messenger here, but we're going to walk through why I think there could be eventually a move in that direction. So let's get back into what I got jotted up here, and let's look into the fundamentals in general. So in general, the 2024 revenue for this company has increased about 7 to 8% year over year. They've got $333 million in 2024 revenue. The gross margins are roughly around 75%. It's pretty decent for a SaaS business. It shows decent pricing power, right? What I like most about that, so the margins are decent. They're making money. They haven't turned a profit yet, but their operating losses are actually shrinking about 58% year over year. So that's showing that the road to profitability, we're getting there. The losses are shrinking. The margins are solid. So it's getting there, but it's gradual. It's going to take a little bit of time. On top of that, their growth strategy, which has actually been pretty solid, they're expanding their business-to-business functionality. Their international reach is pretty good, and they're starting to get more larger enterprise clients, which is obviously great for their business, more steady income for them. So it's starting to become more of a steady business. When people first looked at this business back probably in 2020, it was $100 a share. It was COVID time. Shopify is obviously hot because everyone's at home making a business and stuff. And they probably didn't have as clean of a business model. Now you've got a steady SaaS business, in my opinion, with decent margins and a decent roadmap to profitability. Their losses are shrinking, their margins are improving. And I don't think the market's priced that in just yet at this level specifically. The market also hasn't priced in rate cuts. So, I mean, yes, it has, but specific to this company doesn't make any money yet. If there are rate cuts in general, that's only going to be a bullish catalyst for this company because it's going to be cheaper for them to borrow money. They can refinance any loans that they have and be able to borrow more money to grow, right? And borrow at a cheaper rate, which makes it easier for them to be a more successful company longer term and get to that profitability even quicker because they're paying less in interest, whether they refinance or they need new loans at a lower interest rate than they currently are. So it's only a bull catalyst, and everyone's come to the mindset now that we've accepted that we're more than likely going to start cutting rates in the near future here. So I believe that this company is basically an underfollowed company. It's unloved. It's a tech stock, and I see no one talking about it really. I think with a little bit of a spark, you got kind of a powder keg here. A surprise earnings beat, improved guidance, some sort of deal with someone of nature, of some sort of name. This thing goes like that. I think it will become a darling of people eventually. And I think if you like a name like this, again, the risk to reward, just talking from a solid dollars and cents point of view, even if you're only risking that all-time low and you're patient, again, equity, not options, you could be sitting on a very, very, very nice opportunity here. This could even get bought out by Shopify, realistically. It's only a $400 million company, and they're focused more on B2B kind of e-commerce solutions and SaaS business, where Shopify is more of like building, I mean, they do B2B also, but they more of target B2C businesses, like people who want to set up a business to sell to customers. So they might look at this company and look at it as a way to not only take out their competitor, but also get exposure to an area in which maybe they're not exposed to. So eventually this could even be a buyout. Even at even at a $1 billion valuation, you're still talking about 100% increase on your money at this price, with at least being worth $10 and change with a 400 million market cap right here at 515. Now, obviously we got to talk about some of the risks here. They're not making money yet. I said that before. That is obviously a risk factor here, and money to borrow right now is expensive. So keep that in the back of your mind. There's decent competition. You've got Shopify, WooCommerce, and Adobe Commerce. There's other options out there in general. But what I will say as a contradictory point to that point is that the market share for this industry, in my opinion, is very large. And there's a lot of room for people to eat at this table. And I don't doubt that this company could take a bigger bite out of that market share in general. The other thing you want to keep in mind is a risk factor, and you see the same argument with Shopify, is that e-commerce is out of favor post-pandemic. It was really hot during the pandemic because no one could leave their house and all this stuff. I would argue that point isn't valid, but some people will make that argument, and I'll argue that isn't valid because if you look at Amazon, it's not valid. And what I mean by that is people are shopping online more than they're shopping in store. I think that trend will continue, and if you're of the belief that trend will continue, then more than likely you'd be more bullish on this company than bearish from that point of view. If you're of the belief that the e-commerce sector has fallen out of grace in general, or it's in a strong consolidating phase, then that would be a risk factor for you to continue. I would summarize that this company is a solid turnaround play and a contrarian play, really, for a good patient investor, but it is not going to be a quick play by any means. Now, unless something happens tomorrow and there's hot news and whatever, it takes off. Like I said, it's a powder keg, but a powder keg will just sit there until there's a spark, right? So you need some level of spark. You need something to excite it. And it's not there just yet. So it could float around down here for a bit, but if you're patient on equity, I think this is a name you're going to come back to one day and come back to this clip, and I'll probably gloat about it on social media if it happens and say, hey, remember when I told you about Bigcommerce at $5? Well, now it's at, and you'd be very happy. And even if, like I said, even if it does tap that the new all-time low and it makes $4.70, are you really losing much money? Haven't you lost money on dumber names with worse risk to reward? This risk to reward on this name is really, really solid in my opinion. Now, I will say Bigcommerce may not be sexy right now. But it's exactly why it's interesting to me, and why stocks that I bring up on this dumpster dive segment are really interesting. I mean, these are the kind of companies I look for, the ones that aren't interesting, because by the time that they are interesting, the price is already appreciated and it will continue to appreciate, and you've got a fantastic entry. And that's why I love companies just like this. So if you believe in a quality SaaS model business, like that's something that you're looking for exposure in your portfolio, decent, pretty deep gross margins, and decent growth over time, this could be one of those quiet outperformers for the next year or so, where it starts to slowly reverse course and then people catch on and it goes. So like I said, this will be a grind, I think, but I do believe this will be a solid opportunity. Now, we'll look over some of these levels real quick and I'll let you guys go. And again, I wouldn't get too excited on this name until you're cracking over that 565 and 575 area. Also keep in mind that 200 MA, as I alluded to before, that is a hard level for it to break. And I also said the 50 was hard on the daily as well. Mind you, it has broken the 50 MA here the last 2 days. So it could be the start to something new. You also have earnings coming up on the 31st. So just be aware of that. But past that level here, I've got a ton of support and resistance areas I will read out for you guys, and you can add them to your chart if you so please. $6.01, $6.81, $7.50, $8.60. Let's zoom out here and make this a little easier, because I go all the way up. $10.19, $12.71, $17.27, an unfilled gap at $22.76 to $24.36, $42.17, $63.54, and then another unfilled gap, believe it or not, at $121.31. Now, I didn't get too anal in here with take profit levels and stuff, so I'll go back and rechart this, and maybe I'll make a part 2 on this video if it ever gets up over like 25 bucks. And I'll get more specific levels in here, but I found it very interesting that we have a daily gap left on this name from all the way from the beginning when it IPO'd. Right there. So, will it get back to $121 one day? Who knows? But that's for you to find out if you like this name. And so again, that name is Bigcommerce, BIGC is the ticker, and hopefully you enjoyed the dumpster dive. And if you do and you want to see more content like this, do me a favor, drop a like, a comment, and subscribe down below. Thanks.